Welcome back. Trading for the year is almost over in the stock market, and stocks have been trending down. Joining our conversation right now is our local financial advisor, Bruce Allen of Bruce G. Allen Investments. Good to see you.
You too, Gary.
Our last hurrah, man.
I know.
Yeah, okay. Anyway, since we last spoke, the stock market, as measured by the S&P 500, has been going down almost every day. So what's going on here with that?
What we've seen is that last week we saw very good news in the jobs market. Instead of creating 200,000 jobs in November, there were 263,000 new jobs that were created. And that has been the source of concern for the markets.
Okay, but the markets are going down in reacting to this. So how does that work?
Well, it's a little bit upside down. Right now, there are 4 causes of inflation that the Federal Reserve has identified. Number one is commodity prices.
Okay.
And the price of oil, for example, was at $130 mid-March. Now it's $72 a barrel. And as you saw, the price of gasoline is dropping as well. It's lower than it was last year. That reduction in price pressure is really good for bringing down inflation. Number 2, supply chain. That's gotten a lot better. That's helping inflation come back down. And lastly, in the third of the good column news is the fact that housing market seems to be starting to cool down or at least level off according to the Federal Reserve data. The area of concern for Jerome Powell and his colleagues at the Fed is the labor market. As long as the labor market continues to be strong, as we saw in November, we see continued rising wages, and those rising wages are inflationary, Gary. And so what we're seeing is that the market would like to see actually a cooling off of the labor market, and that would potentially mean that the Federal Reserve is closer to stopping raising rates.
So they're going to meet when? Next Wednesday?
They meet next Wednesday.
Yeah, and what do you think will happen? And I guess the market is already reacting to that.
The market's reacted to some of this really good jobs data, and it looks like the Federal Reserve will raise short-term rates again by another 0.5%, and that's causing stocks to really reassess how fast, how soon is this inflationary pressures, are they going to be over, and how far will the Federal Reserve raise interest rates?
So is this going to continue, this trend of the economy is improving, but the stock market's not?
Well, I'm not sure about that. Nobody can predict what's going to happen in the markets. I mean, this is a bit unusual, but I think that the concern that the markets have is that how far will the Federal Reserve go to stop these inflationary pressures? And it's a little tricky because the labor market slows down after the after the recession has already started. So it's a real balancing act for the Federal Reserve, and the market's going to be watching that very carefully as we go forward over the next several months.
Having said that, you and I have been talking about a possible recession for months, if not a year.
Yes.
And we're seeing it now, but it's not as bad as what was expected, right?
So far, it's been a recession with a little r, not a big R. Let's hope that continues.
Okay. Always good to see you.
Good to work with you.
Okay. Thanks, man. Appreciate it.